Investors and traders, welcome to the channel. Market chart pattern today is 30th of March 2025. I hope everyone is having a fantastic weekend. This month is coming to an end. Tomorrow will be the last trading day and also the last day of the month, and it will also conclude the first quarter. And the time is just flying by. So the year has started, feels like not a long while ago. But what does feel like quite a while is actually in the stock markets and in markets in general, because the stock market has been under a fair amount of pressure in the US stock markets, and this is what we're going to focus on. As always, this video is for educational purposes only. It is not a financial advice. So we start by taking a look at our timing model. This is the weekly chart of Dow Jones Industrial Cash. We have a key date coming up tomorrow. This is 31st of March 2025. Now, this is the weekly chart. So we have to actually give it 2 weeks on either side. So it'll be really interesting now, since this was a date that we had been watching for since last year, actually. So long-term followers of the channel will know. Pretty excited to see what the timing will bring for us. Now let's start by taking a look at some of the global indices. So we'll start by taking a look at India. This is the Sensex index. I think it's on the Bombay Stock Exchange, and we have seen a very nice rally over the course of last 5 years in India. A lot of money actually has been moving into the Indian markets as well over the course of several years, past several years, after COVID specifically. The market has done extremely well. It went right into these key levels, which are again the price projection levels, and we are seeing a pullback. Now this pullback is really interesting, because this index has pulled back roughly about 15%, and we had seen a previous pullback of about 18%, starting in 2021 October. So quite interesting. But what is really interesting is actually on the daily chart. So this is a really key pattern formation where the market actually made an ABCD move right into 38.2% retracement, a very strong support level because of the confluence of the pattern formation and the 38.2% Fibonacci retracement. We saw a very nice rally. This rally is actually, let's see, in terms of the percentage point, yeah, we saw about 8.5% rally over the course of 3 weeks, well, close to a month actually, and it went right into the 38.2% retracement, and it's actually finding a great amount of resistance there. The other thing is that you can see it's just trying to take this top out, and this is kind of a bearish price action, because what happens in the bearish moves is that market tries to take a swing point out, and this is where the sellers come in, and the market actually rolls over. This is what we saw right here as well. Nice rally. In fact, it's an ABCD formation. Then we saw a very nice strong move of over 1%, and then it just went nowhere. That was a double top formation. The chances are that maybe it might be in a bigger ABCD to the downside. Only if it is very strong, we would like to see really good closes above this 30.2% retracement. This is Bombay Stock Exchange. Now, if we move over to Asia, this is the Hang Seng futures. Now, Chinese markets and the Hang Seng, which is the Hong Kong index traded in the Hong Kong Stock Exchange, this has done phenomenally well since the beginning of the year, and whereas the US market since around 19th of February, they've rolled over. So that clearly shows that there has been a repatriation of money moving out of the US market, moving into the Chinese stocks and Chinese stock market, and also Europe, which we'll take a look at shortly. But what is really important to see is that this market has also gone right into this resistance level. There is a pretty strong resistance level right here. It is the 61.8% retracement, and then expansions of 1.272. So looks like it's going to find a great deal of resistance right here, and this is what we are seeing. Actually, the market is pulling back. However, the chances, just because this move has been such a strong move, maybe it just pulls back to about 38.2% retracement, and we have to assess what the price is likely to do here. But it does look like maybe it wants to come back all the way down right here, and right at this trend line formation one more time. Now, if we move over to Europe, let's take a look at the German DAX. You can see the German DAX has also been up very strong since the beginning of the year, and now it's kind of forming a pattern which is a kind of a strange pattern. Maybe it could be thought of some sort of distribution as well, but we had seen something like this right here, but it was of a different nature because of forming a flag formation. This one is looks like a diamond kind of a formation, so not really sure of this, but it's really right at where the daily 1.618 pattern formation came in. And now if it just closes below 22,200, then I think it's just got a chance to pull back all the way to this 89 period moving average. So this is what we are watching in the German DAX. However, on the weekly chart, it's got a chance maybe the CD leg actually extends to all the way to about 24,800. There is a chance for that. It all depends. If the market begins to take these swing points out to the downside, then we might have seen an important high as well. Otherwise, it's right between this 1.272 and 1.618 extension of the AB leg. So the CD leg could be 1.618 times. Now, if we just go back and take a look at this on the monthly chart, because we are pretty much concluding with 1 day trading day left in the month of March. You can see going all the way back to 2009, this 24,000 level is actually also going to be the 1.618 times the AB leg. So the CD leg is actually extending, and this kind of move that we are seeing, it's kind of a move which has the features of a parabola. So it's a fairly parabolic move. It's just gone straight up since the beginning of 2025. And the last time we saw something like this is going back to the .com era. So back to the start of the millennium, 2000 year. And then we all know it just gave back a lot of its gains. Whether something like this will repeat or not, it's hard to say. But what is clearly is that this market is going parabolic. And then if we switch over to the UK, which is FTSE 100, it has also reached the 1.272 times the expansion of this range, and then right here is just testing the top of this range. We have this wedge formation. So on the monthly chart, if it pulls back and breaks below this trend line, then we can say that it could pull back quite a bit. But right now, if we just go back and take a look at this on the daily chart, here we go. It's got a potential head and shoulder pattern formation, really hanging in by the thread with this trend line. If it begins to close below that, then we could see an A, B, C, D for it, and it just comes back towards the middle of the range. And from there, we'll have to see that maybe things might be changing for the FTSE 100 as well. But the European markets have done pretty good in comparison to the US markets, as in particularly since around 19th of February. Now, let's take a look at the S&P 500. Let's take a look at the NASDAQ 100 cash. I'm going to move over to the monthly chart. So let's take a look at this from a longer term perspective. So with one trading day to go for the month of March, this is how the monthly chart is looking. We can see that we have seen a minus 7.68% move to the downside on the cash index. It is getting below this trend line of this channel formation, and the chances are, if we just draw if we just go back to the October of 2022 and we draw a retracement, the 38.2% retracement comes around 17,700 roughly, and of course we have the structural support coming around 16,800 roughly. So this is something that we need to watch. If we just take the previous largest pullback that happened, this market hasn't quite reached that, which perhaps is a little bit of a good thing for the bulls. But the break of this trend line is something that we need to be watching very, very carefully, because it has clearly broken that line. And if we just move over to the weekly chart, here we go. We can clearly see a B, C, D formation. Now, because I believe so much in this A, B, C, D, the CD leg was extended by 1.272 times, and I was thinking maybe we have a chance to go and hit that exactly. But what transpired was actually a double top formation right between these levels, but very, very close to these levels. And I think, I'm actually quite happy that we were able to forecast this move, and the market came very, it just missed it by, if we take it in this percentage point, by very few percentage points actually. But we were forecasting these levels, months in advance. So now let's take a look at what the market is doing now. So one of the things is to look at it like this. This is the channel formation that we looked on the monthly chart. Is much more visible on the weekly chart. So the market actually went below that, but 13th of March is a really pivotal day for the support, because this is where the market hit the 61.8% retracement, and the S&P 500 did the same thing. Some of the other indices also hit key support levels in unison. So that's the real importance of it. Getting below the low of 13th of March is actually will be a significant event, per my opinion, and then we could see the market actually move lower. But right now, what we need to pay attention to is this level of 61.8% retracement. Market has had a bit of a rally, which we'll take a look at on the daily chart. And it found resistance right from a zone that we were watching for as potential resistance, and I think things are slowly becoming more clear now. But the break of the 13th of March 2025 low is very, very important if a break is likely to happen. Now, one thing I would like to point out is, if we just take a look at this on the biggest correction that we had in the CD leg, that was starting from July and ending in 5th of August, that was about minus 15%. And this one has been about, has not been about 15%. It's been about minus 13.76%. So with that respect, the market symmetry concept, if we just take this in percentage points, it's kind of within the limit. However, if we are able to get beyond this 15 or 16%, then the chances increase that we could actually, because it'll mean that the characteristic of the market is changing, and we could see perhaps the next move could be about a 20% move in the NASDAQ 100, which will be right at the 38.2% Fibonacci retracement of the lows of October of 2022 to the recent highs. And if we just go back and compare this to the BC swing, which was the 2022 bear market, the first significant move from the first high to the move where we saw a pretty good bounce take place was about 22%. So that will also mean we will be in that ballpark figure. Now we'll just move down to the daily chart. Here we go. And yeah. So on the daily chart, what we are looking at is this. Look, this is the box that I had drawn. And when we did the video on the indices, we were talking about that there's a chance that this rally that has started, as long as the 61.8% retracement or the 13th of March low is held. It had a chance to rally, and we were looking for resistance to come in this zone. And getting above this zone would actually meant that the rally was actually getting pretty strong, and then we could be looking at another formation. But what has transpired is, and we were really looking for the Friday to give us a lot of clues in terms of price action, was that the market actually found resistance, just getting into the 38.2% retracement, and also this smaller ABCD, pretty strong resistance and a pretty strong move to the downside. Now, let's see how the market is actually going to behave around this 13th of March low. It's possible that market actually probes this lows intraday, take it out, maybe not close below this. That's one scenario, and maybe we could see some sort of consolidation right here, because this move was ABCD. It was very clear, and we had a very strong move to the upside on the 5th of August one. This one, could take a different formation, maybe some sort of a complex formation. So it could mean that we might begin to see some sort of a complex structure form right here, and then ultimately it might do a bigger ABCD, getting back into this zone. That's one possibility. The other possibility is that we might have seen this ABCD move, corrective move to the upside, and then the market is actually trending lower. In that scenario, it will take out the lows of 13th of March, and then we could be looking at an ABCD, which I have drawn here in the blue region, excuse me, blue color lines. And that's the ABCD. I've not labeled it, but it gets right into the 61.8% retracement of this low of October 2023. So we'll have a very strong level should the market get to around here. But before that, we have another possible support level as well, which is around here. So anywhere between these two levels, I think it's going to be a pretty good support level, where we could see the market at least bounce in a pretty strong way. So that is how it could transpire. On the flip side, of course, if the market turns bullish somehow, we'll have to wait and see for further price action, because technically there's a lot of work that needs to be done, and specifically needs to get above these retracement levels, about 50% in particular. Getting above the 89 period moving average will be required. So this is what we are looking at in terms of the NASDAQ 100 cash. So again, watching 13th of March lows. Getting below this, I think this would trigger this ABCD. We could be looking at 17,200, 17,000 even. So this is what we are looking at in NASDAQ 100 cash. And let me actually move to the S&P 500 cash. So let's go back to the monthly chart. Here we go. So this is what the monthly chart looks like. We can see that it's also broken this trend line right here. The month is not over yet, but it's very close. So it's gonna be a minus 6.27% move for the close of the month, and I think this is the largest kind of a move that we have seen since January of 2022 to the downside. I don't think any of these moves were close enough. 4% there, 4.8%. So yeah, things will begin to resemble 2022. Now moving down to the cash, the weekly chart. Here we go. So on the weekly charts, very similar to the NASDAQ 100 cash chart. 13th of March low is really, really important. If we break that, then we might be in this ABCD structure, which is the this yellow and orange one, where it could actually move down to pretty good support around 5125, 5100 roughly. ABCD also 38.2% retracement, 50% retracement. Now what the market has done is it's done about a 10%, 10.5% correction, and we have seen these corrections of this much magnitude in the CD leg higher before as well. So the market symmetry concept in terms of percentage still intact, which could mean that this 13th of March low is very, very important. Maybe the market just probes it, doesn't go too much below it, especially on closing basis. So we wait and see. However, it's broken convincingly. I think we will be in this ABCD, the orange one, 5100, as the kind of rough target, and pretty good support there. And after that, here we go, 4800. This is where we have the structure from this big point B. And that could provide pretty good support. However, we'll have really good support coming in around the 4600 to 4500 should the market begin to go in that way. One thing is that this is the entire move of the 2022 bear market, and if the market symmetry concept in absolute terms, it also points toward 4800. So I would imagine 4800, if the market actually drifts down that direction, will be a really key support. But before that, we have this 5100 to 5125, pretty good support level. So let's see what the price action will give us, but this is on the bearish side what things will look like. And in my opinion, it's 13th of March low. It's very important. If it's held, the market just consolidates here, and that would be better scenario for the bulls. Now here we go. This is what we are looking at in the daily chart of the S&P 500 cash. And when we did the video last time, I had drawn this, and I also drawn this one as well, but this one was the region drawn where the market is likely to find good resistance, especially if it is bearish, because it's 38.2% retracement. So anywhere between 38.2% 50%, and also it did this in ABCD formation, just like the NASDAQ 100 cash. We have seen a strong move to the downside. Now it's coming into what could be the kind of the last support for this move, which is this 61 the 78.6% retracement, which is just where the market pretty much closed last Friday. Getting below this, I think we could be looking at what we discussed here on the weekly chart, a possibility for an ABCD like this. I'm going to put a question mark here. This is for the downside. We'll wait and see if that will happen. That will also be right at the lows of the 5th of August. So that will be another important support level as well. So that possibility exists if the market begins to get above this 38.2% retracement, which is around 5750, 5800 for the cash index. And this is the next zone, and things will be better for the bullish side. But right here, the price action is pretty bearish. So really watching 13th of March closing basis very, very closely. Now let's take a look at the Dow Jones, and we will take a look at this on the futures chart. So let me actually go to the weekly chart first. Here we go. On the weekly chart, what we are looking at is this market went right into this box. I thought maybe it had a chance to actually get above to this 47,000, 4,800, and the reason was that I was thinking that if we just go back and draw this big ABCD, then we get around to 47,500, 4,800 roughly. That would be a perfect ABCD. So that was one thing. The other thing was that if we were to just draw an ABCD of the lows of 2009 like this, and then we projected from the 2020 lows, then the 1.27 to extension also takes us there. So very, very, very strong resistance right there. Also a fantastic target area as well. I don't know if the market might actually do that, but the chances are getting slim because of the recent moves that we are seeing. However, Dow Jones is the one index, because of this kind of stocks it has with some focus on industrials, that is actually a little bit better than the other indices such as NASDAQ 100 and S&P 500. On the weekly basis, it still lost about minus 1.46%, which is much better than the NASDAQ 100, which is tech heavy. So we can see a double top formation right here, and thus far it has pulled right into, if we just draw a retracement, I believe it's close to 50%. Yeah, between 50 and 61.8% retracement. And if we just move it below, and I believe it's right at the 38.2%, which is a little bit lower. So it's got some further movement to the downside where it could find pretty decent support as well. So if I do the expansion levels, yep, so around 40,000 is possible support, pretty good support. And the other one is that, here we go. Look, last Friday, lost about 2.12%. If it is actually in this corrective move, well, if it's in this move ABCD to the downside, maybe around 39,000 is going to be a pretty good support level for it. So between 40,000 to 39,000 will be pretty good support for the Dow Jones, where we could see a pretty good bounce at least, because it would have taken out the 13th of March lows, and then it will take things from there. But the market is looking, as of price action from last Friday, on the bearish side. And if we take a look at the Russell 2000, this is the one of the hardest hit indices, down minus 2.63%. Rally went right into 38.2% retracement, but was not able to get any above that. And on the IWM, I believe it is the same. Yep. And last but not least, let's take a look at the New York NYA, New York Stock Exchange Index. Okay, so one thing I would like to point out is that this index topped back on 29th of November 2024, and had a fantastic rally, went to about a little over 78.6% retracement, and then it's tested the bottom of the range and then went to 61.8% retracement. But each high, this high is lower than this high is lower than this high, this low actually took out these lows, so it seems to be drifting, with the lower highs and lower lows. And I think this is an indicative that even some of the equities, foreign equities, because it has ADRs, there's some pressure coming into those as well. So this one actually topped in 29th of November. Okay, so with that, just take a look at some of the sectors. So I'll do really quick ones. Probably do a separate video for these sectors. We haven't done one in a while. Let's take a look at XLF. So the XLF actually has had a move higher than move lower. It's just range bound, but there is some pressure that has come into it. There was a chance it could get as high as 53.50, but looks like that 52.67 might have been pretty good high for it. And some of the individual stocks in here on the banking side, they have been hit hard. Let's take a look at JP Morgan. Now the JP Morgan stock it's down about nearly 20%, but it also found great support from 61.8% and 38.2% right here, and it went right into this roughly 50% or structural resistance right here and closed lower for the week. Goldman Sachs, here we go. Again, you can see that it's pretty big move to the downside, about 23%. And then if we take a look at, because it also has MasterCard, not exactly a bank, but it has fared well. Visa, same. And then the real reason that it's done quite well as an ETF is because of this, the Berkshire Hathaway, the Warren Buffett's company. And look, it has gone and made new all-time highs. So just thinking about financials, XLF has a very different kind of formation because of its components. If we were to look at the KRE, then what we can see is that it met our objective and just gone nowhere after that. It has also broken the market symmetry BC leg, so it's done this. Now it looks like it might have done an ABCD. Let me double check. Not exactly, but a little bit came close to it. Was just hanging right here where this trend line is, but maybe it's got a further down to go. We'll have to see. Let's take a look at some of the other ones. So XLU, just range bound since the beginning of the year, just not gone much higher. I thought it is in its ABCD higher, but it's just trading range behavior at the moment. And then if we take a look at XLP, which is the the staples, and also range bound, completed this ABCD, just gone nowhere, also completed ABCD to the downside. I think it's just range bound. And then if we take a look at XLC, which is the communications, it's done really well. I think it's because of Meta, because Meta comes under the communications. But now Meta is also, after completing our big target of $690 to $700, it's also pulling back. So we are seeing communications pull back as well, but did the 1.27 exactly to the tick. Now let's take a look at XLV, which is gonna be the healthcare. So healthcare at one moment was doing very well, reached the 1.61 in expansion. Now it's kind of pulling back, coming back in the range. There's a possibility it might be an ABCD where it can actually come and test this bottom of the range. But yeah, it's stronger because of the price rightly hanging around the 20 period moving average. It's got a chance, maybe I would say it will also be more like a range bound affair. Then if we take a look at XLY, which is the staples, the consumer discretionary, and it's been hit hard after hitting the 1.272. It's just pulled back quite a bit. I think it's right at the 38.2% of this leg. Yeah, actually I've already drawn this right into this. I think it's got some sort of support right here. We could see some sort of a bounce at least, and the chances there might just be a bounce. And then let's take a look at the XLE, which is the energy. So energy is actually range bound, and if we take a look at some of the major stocks such as ExxonMobil, you can see also just range bound. But the good thing is that it's just range bound, but it's not going down much either. So energy has got some legs, and then it also pays good dividends as well. And then if we take a look at the Shell, the ADR, so let's take a look at this, and you can see that this stock has also done quite well even in 2020, beginning of 2025 as well, but it's getting into this resistance, just structure right there, top, so you can see pretty good resistance level there. And then let's take a look at XRT, which is the retail. You can clearly see that something is wrong with the retail. It's just not able to get above the 50% level, and it's just now moving lower. And if we were to take a look at some of the stocks such as Walmart, at one moment Walmart was just, look at this parabolic move in Walmart, and now it's pulling back. I think it's $80 is where it likes to go, maybe find some sort of support, but I think it's going much lower. And look at this. This is something I wanted to show you guys. It was like this. Look, you see this parabolic move in Walmart. You see that? Since 2022, it's just the parabolic move really started somewhere in August of 2024. Really, but it's not the first time that it has done that. You have to go back to the beginning of the millennium 2000, and after that this just stock went sideways for a decade, maybe even longer. So I think Walmart is telling us something, and the chances are Walmart could be done for its highs for about a decade if the history is likely to repeat. Look, it went up since 1997, 1998, roughly about 370%, and this time it went above since 2015. The 2009 lows, it went above 650% roughly. But now I think higher inflation, tariffs, whatever, I think this thing is done for a decade by the looks of it, if the history is to repeat itself. Then if you take a look at Amazon, you can see completed this big beautiful ABCD, just gone nowhere, done about 22%, moved to the downside. If it just begins to break the bearish this symmetry, I think then it's got to move, which is of a different nature. Thus far it just looks corrective. And let's take a look at real estate. What was the real estate? I'm trying to find the ETF for real estate XLRE. Yeah, this is what I was looking for. Yep. So right at the 61.8% retracement, very close to this ABCD. Yeah, I think the higher rates, they are telling us something is going here. Boom. And yeah, I mean, this is the thing about charts, they don't lie. Price action doesn't lie. I think fair amount of double topping formation, top from here, then a double top here. So I think maybe it's got a chance to pull back all the way right into here. So I think the higher interest rates are maybe having or maybe there is something else, I do not know. So this is what we are watching in the key indices. So we took a look at some of the world indices such as Sensex from the Bombay Stock Exchange, India. Then we took a look at Hong Kong stock market, the HSI index, the German DAX, the UK FTSE 100. Then we covered the NASDAQ 100 cash, S&P 500 cash, Dow Jones Industrial Futures, brief view of the Russell 2000 and the New York Stock Exchange Index as well, and some of the ETFs in terms of the sectors and individual stocks. Just a very, very brief quick look. So thank you very much for watching the video. Now just one request, if you found this video of educational value, give it a thumbs up and please do subscribe to the channel. And if you want to support the channel, in the description you'll find a link to the Stripe. It will just help me with some of the subscription, some other costs associated with running the channel, and it will also just help me focus more on doing the research and bring all the good stuff that you like to hear to you guys, and even better because I can focus a little bit more and also be able to pay some of the expenses associated with running the channel as well. So I will really appreciate that. Thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.